The Taxpert Car Planner 2020 does all the calculations to help you advise clients on the financial and tax implications of buying cars for use either in their self-employment businesses or if they're employees in their companies, if they're company director shareholders, whether to buy personally or to have a company car. The input screen is hugely important, and GIGO, garbage in, GIGO out, applies here as elsewhere. And I've tried to keep it as simple as possible. We can input any yellow background cell. We've got here company name, the employee tax band, that's a drop-down box, higher, basic or top rate. And that'll then change the profit extraction rate. If it's an owner-managed business, if I change it to basic, the dividend tax rate is 7.5%. Put it back to higher. You can put in business mileage, private mileage, and then over on the right, you can put in the make and model and the registration number. Important, of course, is the list price, because that's going to affect the benefit in kind. We can put in the CO2 emissions figure. That would normally come from the V5, the vehicle registration document. And then we can, I'll just have to move it across a bit, select the fuel type. And is it petrol? Is it diesel, RDE2 compliant or not RDE2? Is it hybrid or is it electric? And if it's hybrid, you might see there the zero emissions mileage box is then brought in, because we would then need to know what the zero emissions mileage figure is, since that has an effect on benefits in kind for 2020-21 onwards. If it's a second-hand car, we need the date first registered and the price paid, because that will have implications for the calculations. But let me put it back to a petrol car, and the zero emissions mileage disappears. And then in the bottom half of the input screen, on the right, you've got finance details. Choose your depreciation rate. I've chosen 20%. Choose how many years. I've imposed a maximum of 5 years, but anything up to 5 will do. Choose a start date. That cannot be later than 5th April 2021, because I'll need to update it for any changes by then. The end date is automatic on the basis of the start date and the number of years. And choose the net present value discount rate, because that'll feed into the overall calculations. I've chosen a 5% discount rate there. On personal contract plan details, a deposit, I've put in the amount that if you go for a personal contract plan, you would pay as a deposit. And then on the basis of the other data, that will automatically give us the monthly payments and guaranteed minimum future value, which will be based on that depreciation rate. If I change that, for example, to 25, then the monthly payments go up and the guaranteed minimum future value has gone down. Interest rate is relevant if we're financing it, and the outright purchase amount financed would go in at the bottom there, if you're taking out a loan in order to buy the car outright. And then finally on the input screen on the left, this is for details where we've got the benefit in kind for an employee to work out. The employee might make a capital contribution. Sometimes that can be tax efficient. There may be an annual private use payment if it's required as a payment, as a condition for the car to be used privately. Is there a fuel benefit? Drop down yes or no. Is there a car allowance? And to the right of that, there's a break even button. Let me just show you what happens if I click that. If I click break even, in fact, nothing happens, so we'll not worry about that just yet. Optional remuneration allowance. If there is an optional remuneration allowance, then that's part of the legislation that came in a couple of years ago. And then the insurance costs and the maintenance costs we put in there. Now, on the basis of the input figures, we then go to the next tab or worksheet, which is the comparison. So that looks at the alternative ways of providing the car for business use. And the first important point to note is that we must identify whether this individual is looking at this as the owner of an owner-managed business, or if I click no, that'll be an employee, including a director shareholder. So let's go back to yes. So this could be a sole trader, and if, or it could be somebody who's got their own company car, somebody who's got their own company. And we've got here the distinction between outright purchase, a personal contract plan, or having it as a company car. And there are a lot of figures there to look at, with net present values included, and the average monthly cost or savings depending on the alternative that we choose. And I can see here, looking at the monthly figures, that the lowest monthly figure would be the 540 if you buy it yourself outright. If you've got your own company, then it's going to cost you £708. That's the total of the employee cost and the company cost. But we then want to have a look at one of the two reports. If you've selected OMB, then that'll open up the sole trader report, which is here. And at the top, it simply replicates the details. Forget the fact that there's a business name there. It wouldn't be HMG Limited. It was a sole trader. But the first two sections there are replicating the input details, and then here we've got the report for the sole trader of the annual figures depending on whether you buy the car outright or take out a personal contract plan. And if you buy the car outright, then the total cost would be 31,000 for this, and if you were to take out a personal contract plan, it would be 37,000 odd. So that shows us that it would be better here to buy it outright. If I then look instead at the OMB report, this would be where we're looking at an owner-manager of a company, so a director-shareholder, if you like. And you can see here that if the company provides the car, then we would have average annual costs of 8,490. So that's if it's a company car. If you were to buy it yourself outright, and you would then be claiming the mileage allowances from the company, you'll see the working shortly on that, your costs would be just under 6,500 a year. Whereas if you were to do it under a personal contract plan as a personal car, it would be 7,733. So again, the answer here would be to buy the car yourself. If I just go back to the input figure and just make one fairly obvious point, suppose that instead of this being a petrol engined car, it was in fact a wholly electric car, and of course the CO2 emissions would then be zero. Well, if I then look at the comparison figure, you may remember that thus far we were looking at an example where it was better to have an outright purchase in each case, whereas here you can see straight away, all right, the outright purchase is still better at 527 than a personal contract plan, but if it is a company car, it's way cheaper. And of course, that's because the company can get 100% first year allowance on the car, and the individual is going to have a zero benefit in kind for the current tax year 2021. And we can see that in the OMB report, the company provision has now dropped to 4763, and that's considerably lower than either of the other two options. So that's the sort of way we can play around with it. Let me go back though to having the electric car, just to show you one or two other things, and switch that not to electric, go back to petrol. The emissions were 128, doesn't really matter. And let's now have a look at this comparison page. If it wasn't an owner managed, then we're looking simply at the question as to whether it's better for the employee to be provided with a company car or to have perhaps a car allowance and to provide the car themselves. And here we can see that for these figures, it would be better to have a company car, with the costs being 5,172. And if I go back to my input, is it possible on that to get a break-even figure? No, it isn't. Oh, yes, it is. You can see that break-even. When I clicked that, it then populated this cell with the figure £8,644. Now, what I've tried to do there is build in algorithms that will tell me the break-even car allowance, which if the company were to pay, would cost the company the same as providing a car. So what the company might say to this individual is, look, you can either have the car or you can have a car allowance of 8,644. Well, let's now have a look at some of the workings that you can access if you want to drill down into the figures. I've got the personal cash flow workings here, and you can see for the different years that are affected, the way in which the running costs are included, the capital allowances, the tax figures, really all quite complicated. And you can see here the company cash flows, again, depending on whether it's outright purchase, personal contracts, etc. The workings that go into all of that, unbelievably complicated. I've done all the work for you, but you can, including with the capital allowances, have a look at, even with the loan payment schedule, if there is a loan, have a look at where all of the figures go, that where all the figures come from, I should say, that go into this calculation. And so the flexibility I've built in should enable you, once you've worked out which figures to put where, which box to click, to give your clients the best advice as to how they should provide cars for use in their business and what the different options are, not just in terms of different types of car, but in terms of whether it should be a company car or whether they should own it personally, and if so, should it be outright purchase or some other way of financing it.